What do we learn from the e-commerce giant overall? I know there's a lot of specific concern for AWS forecasts, right?
Yeah, the Amazon Web Services forecast wasn't particularly great. I think actually investors are probably focused more on the broader revenue projection for the 3 months ending in March, because that's going to decelerate from the December levels. It's expected to some degree because, of course, Amazon benefits from holiday spending in a way that it doesn't in the first quarter. But nonetheless, the 121 billion to 126 billion range was south of the street forecast and caught investors a little bit by surprise. Amazon Web Services growth rate is absolutely going to slow as well. But I think that was for the large part understood given what we had heard from the chip makers, what we had heard from Microsoft, and a couple of other companies in the cloud space. So I don't know that that caught investors in a materially different position, but I think that overall revenue situation and the fact that the cost base is still relatively high and as a result is going to induce significant accounting charges to the quarter itself is a big component for the stock movement this morning.
Now, let me ask you about Google parent Alphabet, also reporting yesterday. Different story than Amazon, right? Alphabet here missing on both top and bottom. What are some of the major headwinds you think weighing in on that company's last? I'm looking at the numbers here up on the screen. Did I get that right? Actual, expected, yes, on top and bottom. What are some of the major headlines weighing in there for the last quarter for Google?
Yeah, I mean, it's an ad sales story for Google for the most part. And we've understood that from some of the concerns that we've heard from Meta, from Snap, and other companies in the digital ad space. So that earnings miss wasn't terribly surprising. But the outsized decline in revenues from YouTube, which is one of its principal generators of ad revenues, was absolutely notable. And for me, JD, the narrative change now is what's interesting. Google seems to be taking a page out of the Meta platform's playbook, and they're now going to be focusing on cost cuts, on pulling back of investments into divisions that aren't generating profits, at least not expected to in the near term, and just becoming much more disciplined with respect to capital expenditures and all the rest of it. And that's very much echoing what Mark Zuckerberg told us earlier this week. Meta was rewarded for it. Google has yet to be so. I think because its cost base is so elevated, investors really want to see in great detail how they're actually going to pare that down over the coming months in order to compensate for the ad sales headwind. So to some degree, I think investors are in a show-me mood right now with Google taking the stock down as a result.
Apple, that company witnessing the largest revenue decline seen since 2016. What else do we learn from that company's report? My goodness, we were following this one very closely. What happened?
We were indeed. The stock had turned green the last I looked. It will probably stay positive for the rest of the day. And I think it speaks to a couple of different things. Firstly, Apple's transparency. They were pretty straightforward with us back in the latter part of November when they warned about the supply chain disruptions in China, the impact they were going to have on iPhone sales over the holiday quarter. And that's precisely what happened. We saw an 8% decline in iPhone sales. They came in light of forecasts at just under $66 billion. The assumption being, JD, that sales were not necessarily lost over the December quarter. They're just delayed into the March quarter because demand hasn't really changed. Not everyone agrees with that thesis. We're seeing forecasts from Samsung, for instance, which says the global smartphone market is going to contract. Taiwan Semiconductor, which is the biggest contract chip maker in the world, says pretty much the same thing. But Apple's demand has remained consistent, and investors are more than happy to believe Tim Cook's projections because, of course, he's earned the benefit of the doubt through the entirety of his stewardship of the company. So the fact that Apple said iPhone revenues are going to accelerate into the March quarter seemed to placate investors with respect to the earnings miss, and it's turned positive as a result.